The November numbers are in, and the Cypress real estate market is officially in a state of change. I'm Chase with the Whitney Team and First Team Real Estate right here in Cypress. And if you're thinking about buying or selling a home in our area, you really need to understand what the numbers actually mean for you. Single-family home prices are holding incredibly strong right now, right around that $1 million mark. But how long these homes are taking to sell tells a completely different story. Now, meanwhile, the condo and townhome markets, especially in places like Tanglewood and Cypress Village, are showing some clear signs of softening. This is not, however, a market crash. It's simply a recalibration. And within that recalibration are real opportunities. Whether you're looking to buy your first home or sell your current one, let's break down exactly what the data and the numbers say. Let's start with single-family homes, because that's where the story gets really interesting. The median price is holding firm right around that $1 million mark, like I said before. That's about a 9.7% appreciation compared to this time last year. Now, Cypress is actually outperforming cities like Anaheim on price growth, so on the surface, it seems like a strong seller's market. But the real story, the number that changes everything, is time on market. Last November, a typical home in Cypress took about 30 days to sell. This November, looking closer to 43 to 49. That's an increase of 50 or so percent. That's a massive shift in pace. Now, that's not quite a buyer's market though. It's still a seller's market, just not quite as strong. What this means on the ground depends entirely on the neighborhood and, crucially, the price point. In the more affordable single-story neighborhoods like the Brentwoods and Imperial Estates, well-priced homes under $950 are still incredibly competitive. We're still seeing multiple offers on properties that are priced correctly from day one, but once we look into the fairway parks and lake parks and maybe the meadows, and especially the higher priced homes like Pacesetters, Greenbrooks, and even Sorrento, the game changes. Overpriced listings in these areas are sitting on the market 2, 3, even 4 months. They're just not moving. The key takeaway for sellers is that pricing perfection is now a complete non-negotiable. The market is punishing any kind of overpricing immediately. But here's the positive spin. The list to sales price ratio is still very strong at 99%. That means when a home goes under contract, it's almost very close to the asking price originally. The deals are getting done. Now for buyers, this is the first time in years you've had much leverage. You have more time to think, you have more homes to choose from, especially with inventory up 40 or so percent, and the ability to negotiate on terms, maybe even get a seller credit for closing costs or a rate buy down. It's no longer a race to submit an offer 10% above asking with all your contingencies waived, and trust me, I've seen that too. Now, if the single-family home market is experiencing a recalibration, the condo and townhome market is certainly where we're seeing a bit more softening. The median price here has actually dipped a few percent year over year, now sitting between $650 to $750 in that range together, and time it takes to sell has stretched out even further to 55 to 65 days on market, with available inventory almost doubling from last year. Now, this trend is particularly noticeable in specific communities. In Tanglewood and Cypress Village, for example, we're seeing older inventory face significant price resistance. Buyers in this segment are being much more selective. They're comparing older units to newer developments in other parts of Orange County, and they're factoring in potential HOA fees or even special assessments like what's going on currently in Cypress Monterey. This increased caution is reflected in the list to sales price ratio, which has dropped to about 97 or so percent. In practical terms, that means sellers are more frequently accepting offers 2 or 3% below their asking price. Now, but for a savvy buyer, this softening represents a real value opportunity. If you're a first-time buyer looking to downsize, there are deals to be found in the attached home market right now. The critical word here is savvy. This is not a market to skip your due diligence. In fact, it's the exact opposite. You need to be thorough, get a great inspector, scrutinize the HOA finances and meeting minutes, and understand what you're buying into. The reason this segment is responding differently to interest rate changes is affordability. Even with rates where they are right now, the monthly payment on a $700,000 condo is far more accessible than a $1.05 or $1.1 million house. But that also means that buyers in this price range are extremely payment conscious, so any hint of future HOA fee increases or maintenance issues can be a potential deal breaker. Now, the big question on everyone's mind is interest rates. This is the key that unlocks all other numbers we discussed at the top. We've finally seen rates dip and hold under 6.25%. As a matter of fact, today they're at 6 1/8, which is much lower than even that. But this is the longest stretch we've had rates under 6.25 since 2022. Now, that might not sound like a massive drop. Let's talk about what it actually means. On a $1 million single-family home, the difference between 7% and 6.25% is about $500 per month on your principal and interest. That's real money, and it's making homeownership possible for an entirely new group of buyers who were just priced out a few months ago. Now, this brings us to the unique window we're in right now. December and the beginning of January is historically a seasonal soft spot. A lot of casual buyers and sellers are distracted by the holidays, of course, but serious buyers and serious sellers are still very much active. This is when motivated sellers who need to move are more open to negotiation, and serious buyers who are out looking have far less competition to worry about. It's the perfect storm of low rates and low competition. And with the Fed meeting today on December 9th, the potential to make another rate cut, locking in your rate now might be a smart move. Don't fall into the trap waiting for some mythical sub-6 rate. While many experts are predicting rates to be under 6% by about the springtime, if you wait that long to make your move, prices might be reacting too quickly on the backside. Here's the truth. Rates in the low 6s are historically very reasonable, and they give you the power to act now while you have this leverage as well. We're also seeing seller concessions like paying for rate buydowns to get your payment even lower become a more common and effective negotiating tool. When you run the numbers, buying a home in Cypress with today's rates often comes out ahead of renting a comparable property, especially when you factor in the long-term wealth building of your home's equity. So let's talk about a forecast. What does it look like heading into the new year? Many experts again are predicting we could see rates finally dip under 6% at some point in 2026. But I want to be very clear here. It's a possibility, not a promise. The biggest risk right now is waiting for the perfect conditions that might not come, only to see both rates and prices move against you in the new year. What we can anticipate with more certainty is a typical January pattern. We almost always see a surge of new listings very quickly after the new year, sometimes beginning of January, sometimes the end of January, but people are starting to make their moves. This temporary spike in inventory can create a short-lived advantage for buyers, but it also means more competition from other buyers who've had the same idea. The real strategic timing is the window between the holidays and the spring market frenzy. That's your prime negotiating time. Inventory patterns suggest this buyer-friendly leverage will likely continue through the first quarter of 2026, but its peak is right now. The key takeaway is clear. The market has decisively shifted to favor prepared buyers and realistic sellers. If you have your financing in order, December and January offer a unique, low competition opportunity to make your move. For specific data on your neighborhood or personalized advice on your situation, feel free to reach out to me directly. And for the ongoing market intelligence as we track these trends, make sure to subscribe, and I'll see you around town or on the next video.